Stop worrying about Tesla's delivery numbers. Seriously. If you think Tesla's future is decided by quarterly sales reports, you're missing the real story unfolding in Germany. Here is the counterintuitive truth that every Tesla investor needs to understand. Tesla is boosting production at its Berlin factory by 20%, to 7,500 vehicles per week. That's 375,000 cars a year. And they're adding 3,500 new jobs to make it happen. Why? Because European Model Y demand is surging. Fuel prices are up from the Iran war. Consumers are switching to EVs. The Berlin factory is Tesla's only European production site. It currently builds the Model Y and exports to over 30 countries. Local production means less reliance on imports from China and the US. Lower logistics costs. Protection from trade restrictions. But here's the catch. The stock only rose 1% on the news. Why? Because Q2 earnings on July 22 are the real test. The delivery beat of 480,126 vehicles is already priced in. Investors want margins. Let me break down the Berlin expansion and what to watch on earnings. I'll admit something. When I saw the Berlin expansion news, I thought, another factory. More cars. Boring. Then I read the strategy. And I realized, this is about supply chain resilience. Not just production volume. Today, I'm going to break down Tesla's Berlin factory expansion. By the end, you will understand why Berlin is Tesla's secret weapon in Europe. Stay with me. Let's start with the expansion plan. The target, 7,500 vehicles per week. That's 375,000 vehicles per year at full capacity. The current output, approximately 6,250 vehicles per week. The increase is about 20%. The jobs, 3,500 new employees over the near to medium term. About 1,000 of those jobs will support the immediate production ramp-up. The rest will work in car assembly and battery operations. The factory, Gigafactory Berlin-Brandenburg, Tesla's only European production site, opened in March 2022. The product currently builds the Model Y. The reach exports to more than 30 countries. The counterintuitive truth: this isn't just about making more cars. It's about making them closer to where they're sold. Now let me explain why Tesla is expanding. The demand surge. Tesla registrations in France more than doubled, up 105% year-over-year in June. Sweden was up 56%. Denmark was up 39%. The driver, the Iran war. Fuel prices spiking. Consumers switching to electric vehicles. The broader trend. Battery electric vehicle registrations in Europe rose 39.1% in May. The recovery context. Tesla lost almost half its European market share in 2025. Competition from Chinese brands. CEO Elon Musk's political stance. Lack of new models. Now, they're fighting back. The counterintuitive truth: Tesla's European sales are recovering. But they're recovering from a low base. Growth is real, but so is the competition. Now let me explain why Berlin matters strategically. The problem: Tesla relies on imports from China and the US for European sales. The risks: trade restrictions, tariffs, shipping costs, logistical delays. The solution: produce locally, reduce dependency. The benefits: supply flexibility to respond faster to demand changes, trade restriction protection to avoid tariffs on imports, logistics cost reduction with no shipping from China or US, competitive positioning where local production gives a local edge. The capacity utilization: 2025 utilization was 54%. The expansion will improve that. The counterintuitive truth: Tesla's Berlin factory isn't just making cars. It's building a European moat. Local production protects against trade wars and supply chain shocks. Now let me talk about the stock. Monday's move, up 1% on the expansion news. The context: Tesla delivered 480,126 vehicles in Q2, up 25% year-over-year. The market knew the delivery number on July 2nd. The stock actually dropped 7.5% that day because the beat was already priced in. The current status: stock sits at roughly $391. down 22% from its 52-week high of $498.83. Trades at about 360 times earnings. The Q2 earnings, reporting Wednesday, July 22 after market close. Consensus EPS is roughly 55 cents. Revenue is roughly $25.7 billion. The one number that matters, automotive gross margin excluding regulatory credits. It has expanded 4 quarters in a row from 12.5% to 15% to 15.4% to 17.9% to 19.2%. If it hits 20% plus, the stock could soar. If it stalls, the bear case is real. The counterintuitive truth, the Berlin expansion is long-term positive, but Q2 earnings are short-term critical. Investors want margins, not just production numbers. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1. The local production moat. Import reliance is a vulnerability. Local production is a weapon. Berlin reduces dependency on China and the US. That's a strategic advantage. Secret 2. The demand recovery trap. Tesla's European sales are recovering, but they're recovering from 2025's low base. Growth is real, but so is competition from Chinese brands and legacy automakers. Secret 3. The margins versus volume reality. 480,126 deliveries is a record. But the stock trades at 360 times earnings. Investors aren't paying for volume. They're paying for profit. If margins don't improve, the valuation doesn't hold. So what should you actually do with this information? If you already own Tesla, the Berlin expansion is a long-term positive. But Q2 earnings on July 22 are the short-term catalyst. Watch the automotive gross margin. If it hits 20% plus, the stock could break out. If it stalls, expect volatility. If you are a trader, options markets expect a 7.6% move after earnings. The consensus EPS is 55 cents. If Tesla beats, the stock could rally. If it misses, the downside is real. If you are skeptical, Tesla trades at 360 times earnings. Wells Fargo sees $130, that's 67% downside. Wait for margin expansion to confirm the thesis. Here is my question for you. Do you think Tesla's Berlin expansion will finally make Tesla a dominant force in Europe, or will the competition catch up? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on Tesla, AI, and the companies reshaping the industry. I'll see you in the next video.